Good evening, everyone. Can someone tell me whether my voice is clear? And I hope the screen is also clearly visible. Is everything clear? आवाज आ रही है सबको? I hope the voice is also clear. कोई तो बोलो yes or no. Otherwise, chalo. I guess it's fine. Chali. So in this session, we'll be talking about what Reserve Bank of India in its monetary policy meeting has taken decisions, and what has been the stance with respect to what they are thinking in context of the future with respect to liquidity as well as inflation management. So recently, Reserve Bank of India in its 54th Monetary Policy Committee meeting they have decided two things. Primarily, they have decided to reduce the repo rate, by 25 basis points. So the policy rate, which all of you understand, it's the repo rate. Reserve Bank of India has decided to reduce it by 25 basis points. So, previously the repo rate was 6.25%. Now it has been reduced to 6%. And on the basis of the formula, you can obviously calculate the marginal standing facility rate as well as the standing deposit facility rate. So, if the repo rate plus 25 basis points, this will give you marginal standing facility rate as well as the bank rate. If you deduct 25 basis points from the repo rate, this will provide you standing deposit facility rate. So 6.25, 5.75%. So these are the different rates that you can calculate on the basis of that. Okay. So this is the first thing that Reserve Bank of India in its Monetary Policy Committee meeting has decided with respect to reduction in repo rate. So this meeting was convened under the chairmanship of RBI Governor Shri Sanjay Malhotra and other members of the Monetary Policy Committee meeting, which includes Dr. Nagesh Kumar, Sogata Bhattacharya, Professor Ram Singh, Dr. Rajiv Ranjan, and Shri M. Rajeshwar Rao. It's important that you guys remember the name of the members of Monetary Policy Committee. So recently, as you also must have seen in the governor's statement also, that the decision taken to reduce the repo rate was unanimous decision. ठीक है, किसी ने भी ये नहीं बोला है कि रेट को सेम रखो या रेट को बढ़ा दो. Everybody unanimously decided that the rate should cut. Okay, so that's why we saw this. And apart from the rate cut, the most important aspects of the decision taken by the Monetary Policy Committee meeting was the stance. So previously, the stance of the Monetary Policy Committee was neutral in nature. And right now, in this Monetary Policy Committee meeting, they have changed the stance from neutral to accommodative. See, the importance of stance as well as declaring that what's the stance of Monetary Policy Committee, especially in the context of upcoming months, is to provide a direction to various financial institutions in the country that what Reserve Bank of India is thinking in terms of liquidity management as well as inflation in the nearby future. So previously, when neutral stance were there, so neutral stance had both possibilities, either or three possibilities, कि they could have kept the repo rate same, they could have increased the repo rate or they could have reduced the repo rate. But when you shift towards accommodative monetary policy stance, there are two aspects that you need to focus upon. That going forward, most probably, there is a very high chance that repo rate will further decline. Okay, the policy rate will further decline, or the Reserve Bank of India may further cut repo rate. And another aspect over here is that they can keep the repo rate constant. So this is the practical application with respect to the change in stance of the Monetary Policy Committee meeting. I hope this is clear with all of you guys. किसी को कोई दिक्कत? So these are the two most important changes that were announced in the RBI Monetary Policy Committee meeting. And apart from that, RBI Monetary Policy Committee meeting also talks about the projections with respect to GDP as well as inflation for the upcoming financial year, or what you can say the current financial year that we are, currently dealing with. So financial year 25-26. Okay, taking most of the factors into consideration, which includes the recent tariff war that is currently going on, as well as global economic uncertainty that is currently going on, which obviously must have led the decision to reduce the repo rate. उन सारे factors की वजह से RBI ने GDP growth rate को obviously they have reduced the projections, and they have called it that this time the outlook for real GDP growth for 25-26 is now projected at 6.5%. So this is the thing that you guys need to remember. Very important. Okay, so GDP 2025-26, RBI is expecting that it probably will be up to 6.5%. Obviously, they are saying that we are obviously coming from the base of more than 9% of the GDP growth rate in the previous year. But nevertheless, still, this year's GDP projection is 6.5%. And this is the quarter-wise breakup of projections. That means first quarter mein how much they're expecting? 6.5. Then in second quarter 6.7, third quarter 6.6, last quarter 6.3. But with respect to inflation, they are much more positive as compared to the GDP. So inflation ke context mein next financial year, or the current financial year, they're asking or they're projecting inflation growth rate to be at 4%, which is at the middle of the RBI's inflation targeting system. तो RBI का inflation target कितना है? RBI का inflation target है, Monetary Policy Committee का inflation target है 4 ± 2. That means ranging from 2% to 6%, they need to keep inflation in between. So on the basis of that, 4% inflation is the perfect inflation on the basis of which it provides Monetary Policy Committee various options to deal with various kinds of uncertainty that is currently looming across the global economy and their further impacts on the Indian economy. I hope this is clear. So inflation projection depending upon different quarters is also there. Q1 3.6, Q2 3.9, Q3 3.8, and at the last quarter they're expecting inflation to increase to 4.4%. Okay? So till now what we have studied, if we just note down the decisions taken by the RBI Monetary Policy Committee meeting is reducing repo rate to 6%. That is a 25 basis points reduction. Accordingly, the MSF rate as well as the bank rate would be 6.25%, whereas the SDF rate would be 5.75%. The stance also has been changed from neutral to accommodative. That means more inclination towards the dovish monetary policy. As well as in terms of projections, we've seen GDP projection to be at 6.5% as well as inflation projection to be at 4%. Is this clear? किसी को कोई दिक्कत? Okay, if this is clear, now we'll shift towards various statement on regulatory and other functions by the Reserve Bank of India governor, which tells us, or at least gives us the glimpse in context of what kind of regulations or what kind of circulars RBI is trying to think upon launching in the upcoming time period. है ना? तो वो चीज भी एक बार देख लेते हैं. So now we'll talk about the statement on development and regulatory policies by the Reserve Bank of India governor. So first thing, he was talking about securitization of stressed asset framework. In this whole scenario, if you just see whatever that is written in the highlights of the statement, it says with this objective, RBI had released a discussion paper with respect to securitization of stressed asset framework in January 2023 to seek comments. After that, they have received, received suggestion from stakeholders, and by incorporating those suggestions, they will be establishing a framework to enable securitization of stressed assets through a market-based mechanism. So let's talk about in little bit detail with respect to what this framework is all about. So all of you know that if a bank has NPA, what are the various options for the bank in order to have a resolution of those NPAs? They see one route we already know, that they can go to ARC. ARC can buy these NPAs, okay, and give them money instantly. And then ARC securitize these NPAs and sell it in the market to various investors. So this route we've already known previously कि NPA को खरीद के उसको सिक्योरिटी बना के मार्केट में एज ए इंस्ट्रूमेंट डालते हैं जिसको इन्वेस्टर्स खरीद लेते हैं. So that route we already know. But apart from that, Reserve Bank of India was thinking that if this is the best way to resolve NPA, or if it is the best way to share risk, then why not directly provide banks to do the same thing? Why asking them to first go to ARC and then securitization happens? Why not, instead of not going to ARC, you can securitize on your own and then sell it to the investors in the market. So this new framework is what RBI is right now discussing about with the public, and public has also provided various comments, and a new circular with respect to how this new framework will be established will be coming in the upcoming future. This is what Reserve Bank of India governor said in the statement on regulatory policies. किसी को कोई दिक्कत? Please tell. If you have any issue, please tell. Next thing is the framework on co-lending arrangements. So when we talk about co-lending arrangements, we are essentially talking about providing loan to a debtor by two institutions simultaneously. For example, a bank, or let's say NBFC. Bank provides 80% of the loan amount, NBFC provides 20% of the loan amount, and then all the formalities are also done by NBFC. So such kind of arrangement is what we call co-lending arrangement, where two institutions are right now providing money, or two institutions are right now providing loans to a single debtor. So why Reserve Bank of India is talking about it? Because co-lending arrangement, if you see in the current ecosystem right now, it is only allowed for specific category of loans. What are those categories? It says that the existing guidelines on co-lending are applicable only to arrangement between bank and NBFCs for priority sector loans. So banks as well as NBFCs can enter into a co-lending arrangement, but only for loans to be provided to the private priority sector lending, or loans provided to priority sector. That's it. Apart from this, nothing was allowed, especially in context of co-lending arrangement. So right now, what did the decision, was taken by Reserve Bank of India? Reserve Bank of India has removed such kind of restrictions. They are saying all the regulated entities will now be free to enter with any of the regulated entity with respect to co-lending arrangement. अब कोई restriction नहीं है, अब आप किसी के साथ co-lending arrangement कर सकते हो. So it has been decided to expand the scope for co-lending and issue a generic regulatory framework for all forms of co-lending arrangement among regulated entities. So everything is allowed from now on. तो उसका circular थोड़े दिनों बाद they will also be releasing. I hope this is clear. Chali. The third thing is review of guidelines for lending against gold jewelry. So all of you understands that if we provide gold jewelry as a collateral, we can take loan against that. So everything was fine, then why RBI is actually trying to change a little bit things. So let's see what RBI is saying. Loans against collateral of gold jewelry and ornaments are extended by regulated entities for both consumption as well as income generation purpose. That means loans against jewelry you can utilize for your consumption or you can utilize for your business purpose so that you can generate income. However, prudential and conduct related regulations for such loans have been issued from time to time, and they vary for different categories of regulated entities. That means they vary for small finance bank, they vary for NBFCs, they vary for normal banks, credit commercial banks. So what Reserve Bank of India is saying, with a view to harmonize such regulations across regulated entities, मतलब सारे entities के लिए एक तरीके का regulation बनाएंगे. So there will be one master circular regarding loan against gold jewelry that will be applicable across different regulated institutions, which include NBFC, which include scheduled commercial bank, which include cooperative banks. All these things will be there. So this is what they are expecting. So it has been decided to issue comprehensive regulations that will be applicable across regulated entities. Simple. Next thing, similar to that, they are also trying to review non-fund based facilities. Non-fund based facilities including guarantees, letter of credit, co-acceptance. So guarantees, all of you guys understand, if somebody has taken loan from a bank and bank is only providing loan if a person X is providing guarantee that if this person fails, so they'll be providing guarantee. Similarly, banks also provide guarantees in terms of financial guarantees as well, especially when they act as a surety. So all these guarantees are non-fund based facilities. ठीक है, एक तरीके से फंड तो दे नहीं रहा उसमें कोई, इट्स लाइक अ गारंटी ना, दैट दे आर जस्ट प्रोवाइडिंग इन केस ऑफ कंटिजेंसी दे विल प्रोवाइड यू द मनी. So with respect to this, what exactly Reserve Bank of India is saying? It's saying that it has now been decided to harmonize and consolidate guidelines covering the facilities across all regulated entities. So same thing that was there in case of review of loan against gold jewelry, here also it will be the same. For example, if you see for UCBs and guarantees provided by UCBs, there was a different circular. For scheduled commercial banks providing guarantees, there was a different circular. Okay. So right now what RBI is thinking, in case of guarantees, we will be having a single circular that will be applicable across different kinds of regulated entities. I hope this is clear. किसी को कोई दिक्कत? Next thing is that enhancing transaction limits in UPI. See, every time that these regulatory developments happen, RBI always gives some kind of increase in limits or some kind of increase in overall wallet limits, or such kind of activities or such kind of provisions RBI usually give. But this time RBI is only delegating this responsibility to a particular institution called NPCI. So if you see over here, to enable the ecosystem to respond efficiently to new use cases, it is proposed that National Payment Corporation of India, in consultation with banks and other stakeholders, may announce and revise such UPI limits based on evolving user needs. Because if you currently see in context of person to person and person to merchant, right now it is capped at 1 lakh rupees. मतलब आप यूपीआई में पेमेंट करोगे किसी पर्सन को, मैक्सिमम आप 1 लाख रुपए दे सकते हो, या पर्सन टू मर्चेंट करोगे तो 1 लाख रुपए दे सकते हो, एक्सेप्ट इन स्पेशल केसेस, एंड दैट टू फॉर मर्चेंट. स्पेशल केसेस में क्या, व्हेन यू आर प्रोवाइडिंग फॉर एग्जांपल लेट्स से मेडिकल इंश्योरेंस, ठीक है, या फिर फॉर एनी अदर, फॉर इंश्योरेंस प्रीमियम्स, फॉर SIPs, उस केसेस में आप बढ़ा सकते हो पैसा. बट दीज आर ओनली स्पेसिफिक केसेस, isn't it? तो right now RBI is saying, instead of Reserve Bank of India changing each and every type of ceiling for different kinds of use cases, why not delegate this whole authority to another organization? So next time onwards, if there is a requirement for ceiling to be increased, NPCI will decide how much ceiling will increase with what category. ठीक है? Obviously NPCI will do this by consulting with banks as well as other stakeholders. Okay, so I hope this thing is clear. From next time onwards, NPCI will change these limits. तो लिमिट में अभी कोई चेंज नहीं हुआ है, ओनली अथॉरिटी ऑफ चेंजिंग लिमिट हैज बीन प्रोवाइडेड टू NPCI. Now, apart from that, there is also one more provision added in this UPI limit category. It says that within this umbrella limit of UPI transactions set by NPCI in future, banks individually can also set their own limits, but those limits should be within the limit set by NPCI. So for example, if NPCI set P2P limit of 2 lakh rupees, a bank can set internal limit of let's say 1.75, 1.5 if they want. Okay, so flexibility is provided across different stakeholders. So if you can see over here, banks shall continue to have discretion to decide their own internal limits within the limits announced by NPCI. So is this clear? किसी को कोई दिक्कत यहाँ तक? I hope everyone understood what exactly Reserve Bank of India intended with this direction. And if it is clear, then we'll move forward to the last announcement in the fintech sector announced by Reserve Bank of India. It says on-tap application facility under the theme neutral regulatory sandbox. So first of all, it is essential that you understand what regulatory sandbox is all about. Regulatory sandbox, think about it like an ecosystem where fintech companies can come, okay, test their products before they put it in the market. And while testing, Reserve Bank of India can also understand whether they fulfill all Reserve Bank of India compliances or not. ठीक है, तो मार्केट में उतारने से पहले आप एक तरीके से टेस्ट कर लो उसको रेगुलेटरी सैंडबॉक्स में. तो हर बार क्या होता था, रेगुलेटरी सैंडबॉक्स किसी थीम के साथ आता था. दैट मीन्स फॉर एग्जांपल थीम इज अ सिक्योरिटी, तो ऑल सिक्योरिटी रिलेटेड फिनटेक कंपनीज कुड टेस्ट देयर प्रोडक्ट्स. राइट नाउ व्हाट इज हैपनिंग, राइट नाउ इट इज थीम न्यूट्रल. So any fintech company who want to test their product, they can come to regulatory sandbox and test their products. And apart from that, usually, the cohort is announced somewhere within a particular time period within a whole year. तो मतलब 1-2 महीने आपको मिलते हैं जब आप एप्लीकेशन भरते हो और तब आप अपना प्रोडक्ट टेस्ट कराने के लिए 6-7 महीने के लिए आप लगा देते हो वहाँ पे प्रोडक्ट. So application window is there. But right now what Reserve Bank of India is saying, you can opt for on tap application. What is on tap application? आपका जब मन करे आप रिजर्व बैंक ऑफ इंडिया के पास जाओ, ask for them to put your product in the regulatory sandbox. There is no application window as of now. Whenever you want to test your product in the regulatory sandbox, you can go to the Reserve Bank of India, fill application form, you can start testing your product. Is this clear? किसी को कोई दिक्कत? So this is all with respect to what Reserve Bank of India's Monetary Policy Committee meeting was all about. Okay? If somebody have any doubt, please ask. Otherwise, we'll wind up this session. No doubt. You can get the PDF, on the Telegram channel, main Telegram channel. Chalo. Thank you guys for joining. We'll meet in the next session. Thank you.